Very good morning and welcome to this week's edition of the Upside Podcast. I am your host, Kristie, and today we have a very, very special guest. We have Kristie from Blitzscaling Ventures who joins us all the way from California. Welcome, Chris.
It's great to be here, Kristie. I'm so glad we're able to do this. It was exciting meeting you in Singapore, and now, through the miracle of technology, we're together again.
Yeah, indeed. So I think we met quite by chance actually while at Super Return in Singapore. I was wondering actually if you could kind of share, was it your first time in Singapore? Have you been to Asia much in the past? And what were some of your observations on the market?
Excellent question. So, this was actually my second visit to Singapore, but my first visit to Singapore was in the year 2000. So, a lot of time had passed. As I like to comment to people, for example, the Marina Bay Sands did not exist when I last
Oh
visited
man.
Singapore. So, things were very different. There was literally less of Singapore than there is today. But
Wow.
I do remember having very fond recollections of being in Singapore to this day. My wife says that Singapore is one of her favorite places that we've ever visited.
Oh.
So that's why I was very glad to get a chance to go back. I'd been asked to speak on a panel at Super Return, and to me, that was as good an excuse as any. Now, the funny thing is, I had been scheduled to go back to Singapore 5 years ago in 2020. I was going to speak at a conference in April. But
Interesting.
alas, as you know, fate intervened and all of those conferences were canceled. So I'm glad I got a chance to come back, and it was an awesome experience. I really enjoyed Super Return, especially all the people I was able to meet, including you. And I'm glad that I'll be going back to Singapore again in a couple of weeks to keynote at Switch.
Well, there must be a huge difference between Singapore of 2000 till now. I mean, there wasn't, I covered like the VC market quite a bit, and I don't think the VC market even existed in Southeast Asia in 2000. So, your motivations of the trip as well, I'm sure must have changed. You must have been in Singapore for fundraising, I would imagine, but, what kind of conversations have you had, and were there any particular, observations or takeaways that you had from just the market at large that you're seeing outside of the US?
Yeah, so you're absolutely right that I think the ecosystem is much more developed than it was in 2000. In 2000, I do remember meeting up with some folks. I met up with, I think, folks from Goldman Sachs. Obviously, they were there a long time ago. I even met up with somebody who was a partner over at 3i, which was a European venture capital fund that no longer exists, I believe, but it was a big deal back then. So obviously things have changed a lot. There is now a thriving local ecosystem. I got a chance to meet a number of folks over there, like the folks at Open Space, for example, or Wavemakers.
Mhm.
So really impressed with the kind of people that I met, incredible spirit and warmth and hospitality. In terms of my overall impressions of Singapore, I mean, I think the reason why all these venture capitalists come from all over for
Yeah.
Super Return especially is for fundraising. Singapore is one of the capitals of family offices for the world, and especially for VCs that are starting out with their first, second, third fund. Those family
Mhm.
offices are the perfect investors for them to get involved with. And so
Right.
I think that Singapore has rightly leaned into this, and it's probably going to be more and more common for you to see venture capitalists wandering around the city.
Wow, that's cool. How is the fundraising market like these days? And do you find yourself, you've come to Asia, I believe before we started recording, you mentioned that you've
Mhm.
also been traveling to the Middle East. Where did you start fundraising and how has it been like? Because the market has gone through quite a bit over the last few years.
Yeah, in terms of venture capital fundraising, I got started with Blitzscaling Ventures fundraising in 2020. Obviously, we've seen a lot of changes in the market since then.
Hmm.
More recently, I think that there has been a lot of challenges for, especially for emerging managers, because we have limited partners who hadn't had a lot of exits. We had a significant market downturn. There are all sorts of things that made it harder for people to raise money for their venture capital firms. But it does feel like things are coming back, personally, thanks to some of the natural advantages we have, the brand of the book and the ability to help bridge Silicon Valley with the rest of the world. We've been doing pretty well with our fundraising, and hopefully we'll be able to do more with Singapore as well.
Yeah. I mean, just observationally, I'm sure you've had lots of intros with the various LPs, whether they're here in Asia or in the Middle East, and of course in the US, where I'm assuming most of your LP base is based.
Correct.
What would you say would be some of the differences in terms of, especially in terms of asks? Because my understanding, particularly now for Middle East, is they try to lean into the more strategic elements where they want to borrow some of your expertise, some of your knowledge and know-how from Silicon Valley into the Middle East. I think sometimes that comes with a little bit of, well, the demands, for instance, for
Hmm.
GPs, like, they may want you to either set up an office
Yeah.
or, launch an entire fund where like X% of the allocation has to go into their markets, right? Have those kinds of asks kind of, either evolved in the last few years or because I think a lot of GPs do find that quite difficult to to accommodate to.
Yeah, I think there has definitely been some evolution. Part of that for some period was tightening. So for a while,
Mhm.
as the ecosystems, especially out there in the Gulf, were still developing, and one of the things they wanted is they just wanted to invest in venture capital funds and have them come over and visit and be able to start building the ecosystem that way.
Mm,
More recently, there's been much more of a mandate for the spending and investing to occur within their regions. So
mm,
a big KPI was actually, okay, well, what is the amount of capital that we're capturing here? If we invest
mm.
$100 million, how much of it comes back into our nation state? And so
Oh,
that was a big deal. I think now, thanks to the rise of AI, a lot of the Gulf states see an opportunity to take a leadership position in AI, to build these enormous data centers and the like. And so a lot of the interest these days is not just in local investment, but also in getting people to bring their portfolio companies over to the region. So it's constantly
mhm.
evolving. It's not necessarily easy because not all of the asks are ones that a GP would necessarily agree with. For example,
Yeah.
the local investment really only works if you do a local fund because, again, you have local
Mhm,
LPs who want money being invested locally. You have LPs from outside the region who are like, hey, I just want exposure to Silicon Valley. So it's difficult to reconcile the two in a single
mhm,
fund.
mm. I mean, even among your portfolio companies, which I'm assuming, are they all in the US or have you deployed in the
No,
Middle East and Asia before?
we have deployed in a couple of different areas. So we have one investment in Asia. We have a couple of investments in the Americas outside the United States. We have an investment in Australia. We have an investment in Europe. So we do look outside the United States. We expect most of our investments to be in Silicon Valley because it is the capital of the startup
Mm.
world and it is the cradle of AI. But we think that there could be great companies coming from anywhere. And of course, eventually those companies spring up and we help them move to Silicon Valley as well.
Interesting. So I guess it could see, Blitzscaling could eventually, see itself, deploy, I guess, more internationally and more globally in that sense. I mean, that's one part of the question, but the second part also is how open are your portfolio companies to, say, expanding into the Middle East or expanding into Asia? Because
Yeah.
it would mean as a fund, you will also have to develop that expertise of being able to help them bridge into these new markets, which are, I guess, pretty new to you as well.
Absolutely. Well, that's one of the reasons why I go to these places to build relationships with some of the leading players in these ecosystems, whether it's the governmental entities or whether it is some of the prominent local investors or other corporate leaders. And that's something where, it's not something we can do on our own. Obviously, we're an American fund. We don't have on the ground operations. So we've got to be able to help find potential partners and other folks who can help with that. But I think it's not too hard to convince the startups that they need to go global. They understand from day one that this is a global market, and being able to get traction globally is a really important part of making sure that they don't end up having to fight off competitors all around the world someday.
Wow, that's really interesting. I think one thing also that I was thinking about as I was preparing for the chat with you, and you kind of prefaced it before we started, was kind of the bigger question around like where would global talent build their next? Where do
Yeah.
you think the next big startups are going to be building? in the next, say, 10, 20, 30 years? I mean, I think that conversation, there have been a lot of changes recently. I think the
Yeah.
more recent ones will be policy driven, right? Like, I think Trump has now been curbing, via the H-1B visa. I mean, who knows, the rest of the year, things could
Hmm.
change again. But it's kind of like drawn a huge question mark around, you know, will, say, Indians from India, will they continue going to the US to pursue their further studies, their tertiary education, and continue to see Silicon Valley as a place to build? Where else, if they were not to build in the US, are there other places they could build today? I mean, do you have any like top line kind of observations or thoughts that you have with all these things that are coming out in the market and headlines these days?
Absolutely. I think the first thing to remember about the US market is that things like presidential policy are driven by the president. They are not permanent commitments. And so that's why there is so much change and chaos around this.
Yes.
Things that are established by law are a lot harder to change in comparison to executive orders and presidential policy. Presidential policy is just that. It's something that the executive branch puts out there, and sometimes it's, executive powers allow it to do things, but guess what? A different executive can make a different choice and make that change instantaneously. That's why we see
Mm,
such a dizzying pace of change, because it's all being done by executive order and executive action
mm,
as opposed to by legislation. So I
mm,
think that when we look at what's happening in the world broadly, it is
mm,
still the case that companies are making the effort to come to Silicon Valley. And that is
mm,
because that's where the center of things are. That's where especially a lot of the big companies and partners that they have to work with are. If they're going to work with OpenAI, if they're going to work with Anthropic, if they're going to work with Google or Microsoft or what have you, they're probably
mm,
going to have to come to Silicon Valley because that's where the people are. And this ties in with the H-1B policies. So the
mm,
interesting thing about the H-1B policy is that, of course, I think it is very important to be able to bring the best brains to the United States, just speaking very selfishly. It may be okay to make it expensive for people to bring great brains in, because that just mean but remove the limits on quantity, right? Every year historically, there are
mm,
more people applying for H-1B visas
mm,
than can be granted. And really the ideal would be something where, for example, there was a relatively higher cost to the H-1B visa, but the number of H-1B visas that could be granted could be infinite, could be unlimited. Now, that could generate a huge amount of money for the United States of America, and would also allow the US to avoid an artificial barrier that keeps brilliant people out of the country. Now, I think that what is happening is because I think that there are plenty of people who are like, maybe now isn't the time to go to the United States. And so they look elsewhere. Of course, the first thing they might think is to stay where they are. But if they think about going someplace else, I think that the two places that tend to attract the most attention are, on the one hand, Singapore, and on the other hand, Dubai. And
mm,
both of these places really are similar, right? They
mm,
are city states, essentially, that have a reputation for being open to global trade and
mm,
respecting the rule of law and being a good place to do business. And this is not surprising, because when the folks over in the UAE were setting up the laws and constitution and policies of Dubai, they explicitly invited people over from Singapore to help them figure out,
mm,
hey, how should we do this? So it's
mm,
not a surprise that the two are following basically very similar playbooks and templates. Obviously,
mm,
there's some differences just because of the geography. Dubai, it's
mm,
very close, obviously, to the Middle East and the MENA region, but also to Europe. And there's a tremendous international presence in Dubai. I think the same holds true for Singapore, but Singapore is more oriented towards Asia than Dubai is. Dubai is oriented more towards India and Europe. But
yeah.
that being said, I think both are great places to do business.
Yeah. I mean, I do think, especially having lived in the UAE for the last 1 year, specifically Dubai also, yeah, there are a lot of similarities, and definitely you can see, the UAE, or maybe Abu Dhabi a little bit more than Dubai, becoming a bit of that capital hub for the region. In fact, more than
Yeah.
just India and Europe, but these days, like even Africa, like the GCC Africa corridor is
Absolutely.
something.
You're
Yeah.
100% correct. Dubai is sort of the hub for Africa. Abu Dhabi is definitely the financial hub, and that's because obviously there's more capital in Abu Dhabi than Dubai. But
Mm,
both of them being just like 45 minutes apart, almost act like a single super cluster.
Yeah, but I think I was just having a similar conversation again around the H-1B, visa and all these issues around like talent and policies and things with somebody who was investing out of India just right before you actually,
Mm,
and I mean for him, I mean obviously as an Indian citizen, they're the ones that are most impacted by these policies, and
yes.
I asked him, I'm going to ask you the same question as well. If you were an early stage founder, where would you build? So for him, he feels like India would still be the place, I guess, as an Indian
Yeah.
citizen. And
Hmm.
unfortunately, I think for places like Dubai and Singapore, it's really costly to be an early stage founder. You've been to Dubai. It's not exactly a cheap city to
No, it's
build, which
not.
that interesting. They're trying to position themselves as like, startup hub of the Middle East. But when you go there, you're like, wow, this is a really expensive place to live.
Yes.
I mean, how do you see that kind of factoring into how, early stage founders of the early stage builders of tomorrow will choose to build the next big, startup?
Well, I think that you can sort of think of there's being a couple of different stages or phases
Mm,
in a startup's life. There's the point at which it's just getting started. We often call this the garage phase. And as you
mm,
point out, when you're in that garage phase, what you really need are low costs, but you also need access to talent and access to markets. And so for a lot of entrepreneurs, their home countries may be the right place for them to start because they have the greatest assets and they just have to hope they're living in a country that has decent access to global markets. As the company gets further along and wants to really formalize, it may become much more of a startup. This is where the startup hubs like an Abu Dhabi or Dubai or Singapore can come into play because you've already done the work of starting to build out the company and the business. You have some users, and now you need to really find collaborators, partners, customers. And so you need to go where there is density of network, and that is
mhm,
where these major hubs are. The final thing is as the company really begins to scale up, scaling and starting are actually different. And that's where a lot of them have to go to Silicon Valley. We've invested in companies in different geographies. We invested in a company, for example, Composio, that's founded in India, still has significant developer resources in India, but they're primarily here in the United States now. As a matter of fact, tomorrow, my time, I will be over there speaking about agentic
mm,
blitzscaling at their San Francisco headquarters. They're going to have 150, 200 people there to hear me speak. It's right on the water of San Francisco Bay. And they're an Indian company, but they're really a Silicon Valley company now.
interesting. Yeah. Another question I had for you also, because you have a bit of a front row seat to, all of the developments that are happening in the AI agentic space, over at Silicon Valley. There have been some data points around, say, compression, or time it takes for a startup to hit kind of
Yes.
PMF, right, product market fit. I mean, could you share just from your own personal learnings, from your own portfolio, um, how has that kind of changed from say 2020 till now? If you could illustrate any specific examples from what you've seen from your portfolio, I think that would be super interesting.
Yeah, so I think that, on the one hand, we've seen a compression of timeframes, but it doesn't always have to be the case. A clear example of compression of timeframes, I talked about Composio, so I'll talk about another of our portfolio companies, Crew AI, which is an open source framework for agents in the enterprise.
Mm,
And they've seen tremendous compression of time frame. They were founded in 2024 and they're used by 60% of the Fortune 500 today. So
wow.
that's just remarkable, right? That's happening over a very short period of time. But one of the things that I warn startups, including the ones we invest in, is to make sure that you are not going to fall victim to easy come, easy go. Because if you were able to very rapidly drive adoption, are you building in place the kind of switching costs and competitive barriers that will prevent someone else from just taking that market share from you nearly as quickly?
Mm,
Here, the great example is the coding agents, right? So if we look around at the coding agents, probably the most famous of them is Cursor.
mm,
Cursor, which is the company's technically known as AnySphere, but everyone just knows the product Cursor. Cursor.ai became very popular with developers. They took the LLMs and they put a very powerful user interface on the front end that made it easier for people to go ahead and develop code. And developers everywhere are using products like Cursor. The only
mm,
problem is there's no stickiness. I know that, for example, I spoke with one of my portfolio company CEOs, and he said, "Yeah, my developers would come to me every couple of weeks and they would say, whatever we were using before, that's no longer good. There's a new thing that's better." And he would just
Oh,
tell them, "Go and buy it because you
got
guys
it.
cost so much money. The fact that you're paying $100 a month for a tool is irrelevant to me. Just go get it.
Mhm.
In fact, just have all of them." And the problem is that most of those companies actually make their money off of overage charges and usage charges, not just the subscription. The subscription alone can't sustain them. And so Cursor, which became one of the fastest growing companies of all time to 100 million in revenues, has now been decimated because Anthropic introduced Claude Code, and Claude Code took over and everyone abandoned it and abandoned Cursor and started using Claude Code. And then OpenAI said, "Oh, hold on, let's create this Codex thing because
Yeah.
our model is better than Anthropic's model." And now people are abandoning Claude Code to use Codex. And when you have no switching costs, then the fact that you have a market that's willing to adopt you very quickly means that you have a market that's willing to abandon you very quickly.
Yeah. But how is this going to shift the way VCs are going to be doing venture? Because I mean, are we going to see just a lot more spray and pray, or
Well, the
how do
smart
you even
VC,
keep up with
the smart
all the
VCs will,
changes? Yeah.
yeah. So the smart VCs will do their job. They'll try to figure out if a company is growing rapidly because that market has no loyalty, or if a company is growing rapidly and will be able to hang on to that market.
Yeah.
It's our job as VCs not to just say, "Oh, I can look at this growth chart and see that it's good." I mean, I think everyone can do that. It doesn't take a
Yeah.
genius to see that rapid growth is good. The big question is that actually going to be sustained over time? And can you do the logical thinking, not just looking at a set of metrics and saying, "Okay, it matches up with this particular pattern." So I think
Mhm.
that what has happened is there has been a movement towards all these VCs saying, "Oh, I want to invest in something that is exploding and going to 100 million revenue in a year."
Mhm.
And I'm like, "Yes, I would like to invest in that too." But that is not most companies. And if you only invest in those companies, A, you're going to be incredibly hampered because everyone
Mhm.
wants to invest in those companies. You're not going to be able to get in. B, if everyone
Mhm.
wants to invest in those companies, the price is going to be insane, which leaves you C, vulnerable if it is easy come,
Mhm.
easy go. So my message
Right.
to VCs out there is do your jobs. Try to figure out which companies actually are sustainable and don't just get caught up in whatever is most exciting in the moment.
Yeah. Are there any particular investing principles that, I mean, and you must have a particular framework
Yeah.
in mind when you look at, companies and assessing founders, particularly early stage founders, right?
Yes.
I mean, how has your kind of investing journey kind of evolved from the time that you started to now? Are there particular areas that maybe you thought really highly of in the beginning, but today maybe you thought, oh, it's not such a big deal, and maybe things that you choose to emphasize a lot more today versus before?
Yeah, I think that I've been investing in startups since 2006. So I've certainly had a long journey along the way. There's been a lot of positives and great results. There's also been a lot of painful results as well. I think that's something we all end up learning from. I think that
Mhm.
when I first started off, I was overconfident in my own abilities. I was lucky in that the first couple of investments seemed to do very well. And so I thought I was a genius. And that is something that quickly came crashing down after my next couple of investments. And I realized, no, I'm not a genius. I just happened to get lucky initially. And so I began to try to be more systematic about it. Now, I think that it's over time, what's happened is just trying to figure out how to align an investment philosophy with the specific assets and advantages I have. So after I had my initial foray into investing, I started focusing a lot on just understanding, okay, let me understand the team, let me understand the product, let me understand the traction and market and figure out
Mm,
how to invest that way. And I have more of a product background and I felt like I was pretty good at figuring out the team, perhaps less so on the metric side. That's never been my particular emphasis. But over time, I just kept adding to that toolkit because the key was I needed to find people that my particular assets or my particular advantages would work with.
mm,
So I needed to
mm,
find people where, for example, they really wanted my experience, my coaching, my guidance.
mm, mm,
And I used to tell people, listen, if you can't figure out why someone's letting you into a deal, then
Mm,
one of you, and probably both of you, are being dumb about this. Because if they're taking your money without your being valuable, then either they're not very smart or they're desperate. And so, really understanding what your true value is and leaning into that is critical. So, with Blitzscaling Ventures, as an institutional VC, what we do is we look very specifically for great companies. Everyone does. But then our particular
mm,
slant on it is we want companies that are going after a winner take most market. So, in other words, we want to know that if you grow super fast, that your
mm.
competitors can't catch up. That even if
Okay.
they come at you with the exact same product, they won't be able to catch up. And the other side of it is we want to know that you have a go to market strategy that will let you outgrow the competition. Because guess what? The fact that you're going after a winner take most market doesn't guarantee you'll win it. That's where your go to
Mm,
market strategy comes in. So those
mm,
are the things we really look for today. And of course, we've also written about them on our website so that people can
mm.
review them and decide how to pitch us. Or more likely, rather than reading our website, they'll ask, "Hey, ChatGPT," or "Hey, Claude," or "Hey, Gemini,
Yeah.
you can take a look at the blitzscalingvc.com website, look at their criteria for investment, and please let me know how I should pitch my company. In fact, redesign my pitch deck accordingly."
Yeah. I mean, would you say, how long did it take for you, for your investment philosophy to kind of get into shape? Like, when did you start in earnest? And are you still evolving the philosophy even as
Still
you go
evolving,
along?
still evolving because the
Mhm,
market is always changing. Anybody who feels like they've got it figured out, they are wrong because
mm,
they may have figured it out for the moment, but they won't necessarily continue to be able to invest. If they don't evolve their investing with the markets, their investing is going to go out of style. And
mm,
we see that happen all the time. Over the history of venture capital, there have been many companies that have done very well and then ultimately fallen out of the running and disappeared. You have to continue to reinvent yourself. You can't just sort of say, this is what we do and this is only the only thing we do.
yeah. So one of the things that we've definitely seen, I mean, for me also, having journeyed with the Southeast Asian ecosystem, and I do think the Middle East will eventually get there because, the state has also kind of really encouraged, and we've seen there's like a proliferation of all these fund managers. Everybody's doing VC, everybody's, and of course, the quality of these fund managers are getting better and better because you're now getting some of these, more of them are ex-operators, more of them have had their share of exits. So the bar has been raised, the quality has been raised, and so the competition has raised as well. I mean, do you have any advice for, say, emerging GPs which are trying to get out in the market, especially now when, fundraising is obviously a lot tougher than it was before?
I think the most important thing is to have a detailed and internally coherent story about what your edge is. At the
Mm,
end of the day, there are so many different choices. People can invest in so many different managers. And if you say, we're very smart, we have a good network of people that will help us find these great deals, the LP will say, "Gosh, that sounds like every other person I've heard from. And they all went to these schools or worked at these companies or have these connections. And I don't see why I should pick you ahead of any of them, those other ones."
mhm,
So you need to have a detailed story of what actually makes you different, right? You have to have an edge because there are too many people trying to raise money these days. You have
mm,
to stand out in some way, shape, or form. For us, a lot of that is, leveraging the book itself. Obviously, that helps us stand
mhm,
out. But then we also do things in the field of community and events. In Silicon Valley, we have the Llama Lounge, which is the largest and longest running AI meetup. That's a big, big contributor to our brand here in Silicon Valley. And then around the
mm.
world, we have the AI Salon series of events, which are similar, but are running in 64 cities around the world. And without those, we don't necessarily have an edge. So we have to make sure that we develop an edge and we articulate that edge.
Mm. Interesting. Another question I had also was around, say, early stage. I mean, you primarily invest into early stage startups. I mean, do you start at pre-seed, seed, and how are the check sizes looking like these days, especially with, the advent of AI agents making things a lot cheaper for people to develop products, and where do you kind of see that
Yeah.
going moving forward?
I think that the check sizes remain pretty similar. So, when
Mm,
we look at a pre seed round, you're probably looking at up to 1 million, maybe sometimes a bit more than that. If you're talking about a
Mm,
seed round, you're talking about single digit millions, probably towards the lower end, maybe up to 5 million or so. If
mm,
you're talking about a single round, if you're talking about a Series A round, you're definitely talking about raising, over $10 million and the like. And for us, we tend to write checks in the $500,000 to $1 million range. So it can fit into a Series A, or it can help lead a seed round or a pre-seed round. I think that the other thing that happens is, the valuations are certainly higher today. We were talking with a company we're probably going to do an investment in. We think it's interesting. And I think their pre-money valuation is $18 million. They're still early. This is a company that's only formed a couple of months ago. Now, the founder is very smart and had been doing work before then, but it's still the
mm,
case that a decade or two ago, that would be a much lower number. And even accounting for inflation, there is a higher valuation on some of these AI startups than there once was. But that being said, the exit valuations are significantly higher as well, right? Back in those ancient days when people are like, oh, I'm going to pay $3 million for a company in terms of valuation. Well, those
mm.
companies were going to go public and be worth 300 million or 500 million. And
Yeah.
nowadays we're talking about companies being able to be worth multiple billions of dollars. So the fact that the valuations are higher than they once were historically does not mean that it's a bad idea to invest, because the exits are higher than they were historically as well.
Hmm. But I mean, a lot of these startups may not necessarily want or need to raise additional capital the way like it was in during the heydays, right? So, do you potentially see a future where even the VC industry may find itself kind of not finding a proper role for itself if every single startup is going to be an AI generated startup that's just going to be, raising less and less capital before they hit exit?
Well, that's the thing about an arms race. An arms race is just that. It's not a question of saying, oh, we are going to compete with the companies of yesterday that didn't have access to AI, and we could compete with a
Mm,
lot less resources. It's you're competing with other AI native startups as well, who are going to leverage AI in all the same ways. Now, I
mm,
do think that they will be able to run leaner than companies have in the past, but they won't be
mhm,
able to run as lean as they think, because they're going to be competing with other people on that same playing field. I think in the end, most companies are going to raise money. I mean, people talk about, oh, we don't have to raise money. Well, why is it that OpenAI and Anthropic and all those other guys have raised unprecedentedly large amounts of money? Right? And
mhm,
why somebody's like, oh, well, we created this coding agent. We're generating money hand over fist. So why are you raising money? Right? Ultimately, money is an important tool. It is a
mm,
competitive advantage. It is something that you could use for a lot of things. And whenever people say, oh, we're not going to raise money anymore, I will just point you to all the times in the past when people have said that as well. Way back in let's call it 20 years ago, when the Web 2.0 first started rising, people said, oh,
mhm,
we can go in the cloud. We don't need to have servers anymore. Great. We won't have to raise money for these companies in the same way. And yet
mm.
we always need more, because it's a competition. You can't just compare yourself to the past.
Yeah. What about any particular, say, sectors that you've been following more recently? If you could just kind of take us through some of your, particular investment thesis or areas that you've been looking into more recently.
So we've certainly been looking at the AI agent space, or agentic space. Terrible
Mm.
name, but it seems like that's what people are calling it. And the reason that we looked at it is pretty simple, because human beings are lazy and they would like to get more while doing less. And so you start with the chat bot, where as a human being, you put in a prompt and you get a response back. Now, there's pretty interesting ability to really leverage that, because you could write a one sentence prompt and get back 10,000 words. Some of those words may even be good. So there's definitely some leverage involved. But at the end of the day, you can only just put in one prompt at a time. And the
Mm.
idea behind the agents, especially the coding agents, is that they can actually work on these complex problems and break them down and structure them themselves, instead of you having to do it for them. So you end up with developers who are working on a problem, and they could spin up, dozen agents to work on it while they're asleep. Of course, that's
Right.
going to be appealing to people. And so that's
Mhm.
why we think that companies that help push agents forward are interesting. And that could be a company like Crew AI, which offers a framework that people build on. It could be a company like Composio, which helps make those agents more powerful by making it easier for them to tap into other tools. We have another company called Skyfire that we've invested in that does agent identity and payments, which we think will be very important over time. So that's an example of deciding, hey, we think this is going to be interesting for the following reasons because it helps humans be lazier and get more results. And based on that, we're going to try to invest in some of the infrastructure that's going to make that possible.
Hmm. Okay, we spoke a little bit about the things that excite you. What about the things that keep you up at night?
Well, I think that the thing that keeps almost every venture capitalist up at night, especially ones who are investing early stage, is what are the chances that my company is going to be wiped out by the OpenAI steamroller or the Microsoft steamroller or the Google steamroller? Somebody told me the other day they compared Cursor to like trying to pick up the coins in front of a steamroller, the steamroller being the partners like Anthropic and OpenAI that they're primarily working with. And I think that's a real thing. And I think the fact is, the product of the standalone product of today becomes incorporated or becomes a key part of the foundational model of tomorrow.
Mm,
So people correctly identified coding as an area where AI would really be able to add value. It
mm,
developed very quickly because there's such a good infrastructure for testing and reinforcement learning and things like that. And as a
mm,
result, the success of companies like Cursor caused Anthropic and then OpenAI in turn to say, okay, well, we got to do this too. And now
mm,
that market's gone away. So figuring that out is one of those tough ones. So that's why sometimes you have to suppress your instincts. So for example, people talked about, oh, well, how about video generation? I'm like, video generation, image generation, those are so clearly core that it's going to be difficult. One of the ones I'm actually impressed by is how 11 Labs has been able to maintain a market leadership position, despite the fact that I would have imagined that audio generation would be core enough for the big players to go ahead and steamroll them. But
mm.
thus far, they've been able to avoid that.
Hmm, interesting. Maybe last question before we kind of break off. Is there an investor hero or like a fund manager that you really look up to? If you could share who it is and
Yes.
why.
Well, there are so many that I looked up to and admire. Obviously, my partner, my writing partner, my supporter, Reid Hoffman. I mean, the track record speaks for itself. He saw Facebook and was the first investor. He led the Series A round in Airbnb. He was the first person to invest in OpenAI as a commercial endeavor. And so the track record he's had is just absolutely astonishing. I think back when I was first starting out, back in the 1990s, the incredible track record of some of the greats then, like Mike Moritz and John Doerr. Mike Moritz of Sequoia, backing companies like Yahoo. John Doerr, of course, famously backing Amazon and Google. I mean, that's an entire career right there. So
Mm,
huge, huge admiration for them. And then I admire the pioneers who helped pave the way. My friend Jeff Clavier over at Uncork Ventures pioneered this concept of emerging managers, micro VCs, super angels, whatever you want to call it. He's gone through
mm,
this entire career. Now he's retiring after having backed all these great companies. Other folks who are, currently VCs, there's folks like my friend Simon Lancaster at Omni Ventures, who I admire so much for his ability to help build communities. So I
mm.
just think that there's a lot to be admired and a lot to learn from so many other investors. And I always try to collaborate with them as best I can.
Is there a particular quality that you think they have that makes a good investor great?
I think that the number one thing that makes a good investor great is conviction. If you
Mm,
insist on consensus, if you insist on investing in things that everyone agrees are good, by definition, those are going to be priced up. The
mhm,
way you make real returns is a classic thing, being contrarian and right. And to do that, you have to have conviction. Now, it needs to be based on something. It's not just a wild guess or just
right.
saying, well, everyone else likes that, so I don't. Right? You have to have reasons for what you do. I think the other is that the great investors also prioritize the entrepreneurs. Because at the end of
Mm,
the day, we investors need to realize we're not the ones creating the value. The entrepreneurs are.
yeah.
And people like all those investors that I mentioned, prioritized the entrepreneurs, sought
Right.
out great people, backed them, helped them succeed. And VC at its best is still something that really adds to the possibilities of success for a startup and its founders.
Mm. Cool. Well, thank you so much for joining us today. I think we've come to the end of the podcast. Yeah, I hope to see you again soon. And yeah, I'll see you soon.
Such a pleasure. And if I don't see you in Singapore, I'll catch you in Dubai.
Yeah, absolutely.